Now, after weeks of that bull run that we've seen, the markets seem to be taking a breather. They've given up quite a lot of that enthusiasm in trade this week for sure. The lackluster earnings paired with ebbing signs of a Fed rate cut in March, those factors have led to the sell-off across domestic as well as global markets. We're talking about Dalal Street today. We've seen a decline on the Nifty for the third consecutive session and it's ended at a 3-week low. Wall Street also, in fact, has come under selling pressure after the bank's third quarter has failed to impress investors. So now the question is, which way are the markets headed? Is this a buying opportunity or not? Let's talk about this with Geoff Dennis, who is an independent emerging markets commentator. Good to have you as ever on the show, Geoff. These markets and investors are aflutter here in India for sure, and I reckon in other parts of the world, because 3 days on the trot here in India, we've seen these slides. There are several factors that market watchers are pointing at as reasons for this fall. Many are saying that it's because the global easing of interest rates, that cycle may not start as early as we may have originally believed. Would you say that's a prime factor, that the Fed, for one, may not cut interest rates soon enough, meaning by March or thereabouts?
I think that is one of the two major factors, without any question. The market has started to begin to move towards the Fed's dot plot, which is 3 rate cuts this year. My own view for some time has been there will not be a rate cut until June or July. So moving, I think, in the general direction I thought all along. But I think the second factor that we must bear in mind, given this sell-off, is how strong markets were towards the end of last year, particularly in Q4 as a whole. So I think there was a lot of euphoria then. We're getting some inevitable profit taking at the start of the new year. But the main macro driver of that, without a question, is, I think, a more realistic attitude on the part of the markets about the speed of interest rate cuts and the timing of them, not just in the US, but elsewhere in the world.
Yields moving up, Geoff, and the dollar closer to a 1-month peak. How much pressure do you foresee for emerging markets like India? Because clearly we are not the only one. Peers like Korea and Taiwan, these markets are also seeing a sell-off.
Yes, I mean, I think this is just a temporary sell-off. I think it'll become pretty soon a buying opportunity. In fact, I think it's a buying opportunity now on a 6 to 12-month basis. I just don't know where the short-term sell-off could take us, because essentially I think the narrative has not really changed. I think the market just got ahead of itself in terms of how many rate cuts there could be. Now, once the market adjusts to that, Fed likely to cut rates maybe 3 times, maybe 4, but certainly not in the short term, not for a few months. Then I think what happens is that you'll get the dollar beginning to drift lower again. Bond yields, which of course have rallied, will stabilize and perhaps come down a bit more. All of that, I think, eventually should be pretty good for EM going forward. It's just timing this is going to be very difficult. But I don't think this is the start of a major sell-off, because the narrative, as I say, US economy, soft landing, eventually rate cuts, probably a weaker dollar is, I think, in place. It's just a question of timing. Now, the other thing, unfortunately, is hurting the EM index once again. I think it's now the 4th year in a row, is the dreadful performance by Chinese stocks. So the EM index is down 6% this year, and that's got a lot to do with China, frankly. So EM investors are not just looking at the Fed and the dollar and bonds, etc., and the timing of rate cuts, but they're also looking at the poor performance of the Chinese economy, and again, the poor performance of the Chinese equity markets.
That being said, about the Chinese economy, how much of a role will that have to play for the emerging markets and the kind of slide that we are seeing right now? Is that because the Chinese economy is not moving up robustly anytime soon? Is that going to have a profound impact on emerging markets, you think?
Well, I think it's a question of playing the index, isn't it? China's weight in EM has dropped from a peak of well over 40% in late 2020 to somewhere around 25, 26% as of the end of 2023. And so it's less important than it used to be within the index itself. I mean, of course, at the same time, India's been getting bigger, which of course is very good news generally. So it's going to have a big impact on the index, and it's having that already. But for those investors who can invest in EM ex-China, I think this is probably not a bad idea at the moment, certainly. The Chinese story, which is clearly disappointing, growth is going to struggle, I think, to hit 5% this year. is the sort of thing that's going to drag down sentiment overall in EM. But if I may put it again this way, if eventually the dollar turns lower again, we get towards rate cuts in the US, and the US economy continues to tick along quite nicely, and the global economy, I think EM will start to turn around. India will be a big part of that. And eventually, I think Taiwan and Korea will be as well. Now, clearly, Taiwan's had the election, which has been a source of instability. But I think this is all very, very temporary. And I do expect EM, taking 2024 as a whole, to do quite nicely. My call is up 10%, and that'll happen despite the situation in China. This is, I think, a short-term sell-off.
I'm looking at Wall Street right now. The Dow Jones is down about 0.25%, but the Nasdaq and S&P are in the green, a percentage point up on the Nasdaq, and the S&P is up around 0.4%, and the Dow Jones right now taking a knock of around 0.25%, Geoff. But, you know, we are talking about FIIs, and they seem to be pulling out from India after stellar inflows in 2023. Though domestic inflows are still high here in India. But where is the foreign capital headed now? What will it take for them to return to Indian equities? Because you're talking about the inherent strength there.
These are classic conditions that we've had early in 2024 for the foreign capital to go back home, if you like, to go back to the US, to go back to Europe, because you've had to use the modern vernacular, we've had a risk-off period. Now, assuming I'm right and the narrative ultimately doesn't change, it's just a question of timing, that FII money will come back to the emerging markets, including, of course, to India, over the course of 2024 as a whole. Timing, this is very difficult. But I think on the back of these international events, and of course, there's a lot of geopolitics to worry about as well, and the Chinese economy is a source of worry. But despite all of that, if the main driver here is the US economy and the Fed and the dollar, etc., I think it would be very wrong to get particularly bearish. I think it's just a question of timing. So I fully expect the FII money to be coming back into India and some of the other major emerging markets as we head through the first quarter.
What could be the reason why we are seeing this temporary flutter, at least that's what Geoff believes, it's going to be temporary in nature, is also the kind of movement in oil prices, which seem to be edging up right now. The rupee has seen a slide. All of these are moving pieces, but inherently, Geoff believes that the Indian markets are on a good wicket, and perhaps this might be a time to buy even. Geoff Dennis, always a pleasure having you on the show. Thanks for joining us on India Tonight.